So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling. No trade calls, recommendations, or response for their own stuff. We here for educational purpose only. 31st of March, 2019. Let's get ready for Q2, guys. China data, US data, CAD data, RBA rate decision, non-farm payrolls, Brexit headline risk out of Washington. So, a lot of stuff on deck this week as we go into Q2. I think the thing we need to focus on is the fact that we had this heavy close on the Russell. As we've been discussing, the Russell is our control chart, and we'll have to see if indeed we see more weakness. Now, you see, the divergence between the Russell and the other indices is fairly interesting, and as it has done in the past, and as is our base case scenario, is that this is something that should be on your radar, and to us, this is pointing to more weakness across the board. So unless we see the Russell back above this 200 DMA, and unless we see the Russell back above essentially this big pivotal level, which is the 1600, we're still going to go with that view. So again, I think if you're being tactical, there's a good chance to cover maybe short-term counter-trend rallies. But right here, as we're hovering here going into the week, we'd be looking for, if you're not still holding, to put back those shorts back on the Russell for a retest of those lows and possibly a break lower. The other thing, if you're looking at something like, so let's just not to do all the indices, but if we're looking at the SPX, essentially here we're still stuck, right, in this at these pivotal zones. And just to try and clean this chart up a little bit, I think if you're looking at it in terms of bigger picture, and we can go on something like the weekly, a lot of people, the bulls will be essentially saying that we've held and we're going back to new highs. That's the only way. And the bears are probably going to say, we're trying to put in some complex topping fashion. We're still going to stick with the same thing. Number one, we think the Russell is telling us that there is sign of something to come. But right now, we're still stuck in the box. So we're using this as essentially box trade, right? So short, bullish. Once we're back inside the box with a failed break, we tried some shorts at the middle of the box. And apart from that, we're waiting to get back to the opposite side of the box. Now, clearly here, when you look at this weekly close we got last week, right? Not this week, that just finished last week. This for us is an indication that this is trying to play out. And to us, it's giving us asymmetric risk reward profile, even just for the box play, right? Or for a bigger correction lower. So we're not really going to update our view. It's fairly clear what we're looking for, what we're discussing. As usual, we've been very nimble, trying to hold some core positions, especially on the NASDAQ and on the Russell, but trading some of the other indices a little bit more tactically, as there have been some very nice short-term long opportunities, but essentially we're still stuck, right? And we just have to let things play out. The other thing which is particularly interesting here are the bonds, right? And the way these are trading, we expect to see the bonds right here try and put in a short-term top here. We would not be chasing the longs here. So going back on the weekly, we still think that this could be the hold of a longer-term channel. If we're just looking at it in terms of technicals, if we're trying to think through it, we're a little bit more suspicious about the move higher. But right now, going into the week, what I would focus on are last week's highs, and probably the best way of looking at it is at the daily, and that as long as this doesn't hold for a closing basis, our base case expectation is that we will come back and retest this previous high, back towards that 149, 148.50 range. And if we close below that on the day close basis, then we expect us to move all the way back down into this big chop zone into the 145.30s, essentially be 146s. As long as we hold above this, then this could just be the squeeze continuing to move higher. But again, it looks like it's a little bit overdone. We'll have to be patient and see what happens there. If we're looking at CL, so far, this is being extremely stubborn at those highs. It's been taking out weak players left, right, and center. Our base case is still the same. We think that this is going to find some kind of a top here around the 60 and the 200 DMA. What we said is, even though we were more than happy to try and play this tactically, and we got a lot of nice little short trades off here around that 60, but clearly it's just not cooperating, right? So it's not something we would have held over the weekend. But right now, even if we expect this broadly to hold, our suspicion, if you remember what I did from the update I sent out, is that it almost looks like it's too good to be true. It looks like this is going to be too good to be true. So what we expected is the market to try and flush as many stops as possible, possibly even probe above the 200 just to try and see if they can lure in some breakout players. But essentially, going into this week, we still expect this area to hold from a closing basis, and we like this zone to look for possible short opportunities. Again, we can review this week, but we definitely would not be getting long here, okay? And if we're looking at DXY, this is another one that's been a little bit stubborn. And as usual, and as we always say, we try not to read too much into the shorter term action and into the intra-market relationships into the end of the week, month, quarter. Things could be a little bit off, so we tend to defer to the previous week outlook. So nothing much has changed here. It's staying bid, but we'll really have to see how we open this week. So again, nothing has changed. As far as we're concerned, we're not updating our outlook. This is still a choppy zone. If this holds, we expect us to roll. If this closes above, then we expect possibly this to continue to squeeze very aggressively all the way into the 100. But our base case would still be here at this point, that this is maybe even in a sloppy fashion, but we would expect this to hold. So what does that mean for gold? Again, we did that longer term video outlook on gold. And again, it's the same thing as crude. It's almost, it's just stuck here. It's taken out weak players left, right, and center. But what has changed from a bigger structural point of view? Nothing much, right? We're still stuck, right? 1300 pivotal inside 1350, 1250 range. Would we be surprised to see it trading 1350? Absolutely not. Would we be surprised to see it trade at 1250? Absolutely not. Do we think failures into the 1350 are nice tactical shorts? Sure. Do we think failures at the 1250 into this 200 are nice tactical and possible swing longs? Sure. Do we think there's an awful lot of edge trying to play tight around this area? Probably not, right? So bigger picture is still bullish, but right here short term fairly neutral as we trade here. So we've done crude, we've done gold, we've done so yeah, I mean, some of the currency pairs here, euro, been getting a lot of questions on euro. Well, there's nothing much really that has changed in terms of our euro outlook, right? We still expect it to ultimately find a base inside the 1250 1200 level in a very choppy manner. This does not mean that we're looking for this to skyrocket all the way back into God knows where, but we're looking for this to continue to be a fairly healthy market. So to us, what that means is that, as you've seen, all these moves back into these lows that can't get any traction have seen some decent bounces. And right here, we expect this move to see a decent bounce, at least back into the 1350. We do not, even if we're going to trade 1100s or lower, we don't expect that to happen with the market going necessarily from point A to point B in a straight line. So the way we're going to look at this is just focus on the levels. We expect to see some kind of a sloppy bounce here. We'd expect to see the bounce back into the 1350s. If it can get more traction, then we have to revert back to that much bigger move. If not, if this stays on trend, right, and the sellers come in, then we'd be looking for this to break a little bit more aggressively. So there's no real change, again, with the video I sent out there on how we would be trading this tactically. So I think that's the pair most people have been looking at. If there's any pair anybody wants me to do more of a detailed analysis on here, let me know. Clearly, as we go into this RBA rate decision, the big question is, are we going to see a dovish or a hawkish RBA? I think you might get less dovish than expected, but I just don't understand how. Same thing as our discussion going into the RBA, RBNZ. I don't understand why anybody would really expect them to be uber hawkish, right? So here our base case is still that this is essentially from last year. This, we've been looking for this to trade sub 2016 lows, and this is just trying to get there. So I think I'm still more than happy to hold core short exposure. I think if we rally, the upside surprise could easily take this all the way back into the 73s. So, even an aggressive 200-point squeeze. But ultimately, the base case scenario is still that this is going to stay in trend. Any kind of upside move on the RBA is going to be a very nice selling opportunity for ultimately this to continue to resolve lower. And apart from that, nothing much going on. We're still fairly bearish GPB in general. And, hit me up if anybody has anything they're looking at, any trade they want me to review, or any video they want me to send out on something a little bit more specific, guys. Have an awesome week. I'm sorry there's not that much going on, but essentially we're pretty much where we were. And as always, we don't read too much into weekend, month end, quarter end flows. We wait for this, so this week things will be a little bit clearer. Have an awesome one. For the guys listening on YouTube, again, thank you for all the guys who take the time to comment, like, or share. Always very much appreciated. Have a great one, guys. Bye-bye.